What's going on, everybody? Thank you for choosing this Friday to come hang out with me and look at all the things that trade. 1 second to clear my throat. Let me clear my throat. Okay. Let's see here. All right. We want to talk about all these topics today. The Bitcoin bull trend, that's of course the top of the news here because I've been watching Bitcoin based on Ichimoku for years and years and years. And consistently, I look at Bitcoin on the daily Ichimoku chart using the classic settings. And by that metric, let's take off all the other indicators. Bitcoin has officially entered a bullish trend, and that's defined by price getting above the cloud at the same time that momentum is getting outside the cloud as well. And so we're definitely going to talk about that. We're going to do a full market look, well, at least the full stuff that I like to look at. Also want to talk about stocks. I did some very interesting price action this week. Bonds and banks, interest rates, all those things related. I made a video this week about bonds, specifically TLT, going into 2023. I know a lot of people want to see a resurgence in the YOLO gains of crypto, but let's not ignore what can be a really good risk reward opportunity, and you can make it a big gain if you use options. So we're going to talk about that a little bit. As always, if you got your own stuff that you want to look at or charts you want me to see, just post them in the chat. I do this every Friday at 4 p.m. The market close, the U.S. market close. And if you want to, come hang out in my Discord. I don't charge people for it. I just have a community where I share all my trades in real time, trade futures on a daily basis. If you want to know more about the way that I trade, the way that I analyze, just come ask me. I don't teach any classes yet. I just like to give back and share knowledge and have people share ideas with me because I can't look at every single symbol. I can't look at every single doo-doo coin that's out there. But if there's something I need to see, come tell me about it. So that's my plug. All the like, share, subscribes, and links are down below. I also simultaneously stream this on TradingView and YouTube as well as on Discord. What's up, Discord peeps? If you want to ask some questions on Discord, we typically use the just chatting channel on there. So let's get into it at the top of the hour. Bitcoin yesterday, at the close of UTC time, what crypto's based on, that's what the daily bars are based on. Price closed at 18. What's the close here of Bitcoin? 18,856, which is a good, solid close above this level, which we have been talking about for weeks and weeks. This level, 18,500. That is the halfway point. That's the 50% level of the FTX high to the subsequent low. In context, if we jump up to the weekly here, Bitcoin has, since the all-time high, retraced 77.54%, marking it at the low that it just recently made. Now, this was eminently predictable. And you may be saying like, oh, well, nobody knows what price is going to do. Nobody knows the future. No, you can know. You can know because this is only the fifth in all its history of these retracements in Bitcoin. And between all the last four, they've ranged from 75% to 95% off of their all-time high. The 2018 or the 2017 all-time high down to its subsequent low was a retracement of 83%. And so really, once price got going down from its all-time high, I know a lot of people wanted to dip by. A lot of people wanted to share Michael Saylor podcast. You know, bear in mind, he started doing his podcast back in February of 21 when he had just made his full double down bet, telling people to mortgage their houses and buy as much Bitcoin as they could. Horrible advice. Horrible advice. very irresponsible. We might get to talk about MicroStrategy a little bit here because there was some news this week that was interesting, bullish, and interesting. But you had to assume at some point that Bitcoin was going to retrace at least 75%. It's just that volatile. And so we finally got to that point. The FTX collapse pushed it with FUD down to that level. And let me tell you something else, a little subtle indicator. I like to hang out on some Bitcoin maximalist chats, people that are extremely permabull on Bitcoin. And throughout this whole trend, dip, buy, very active, very chatty, but on this last move down, different than the summer, it got quiet. Fear had finally settled in. The silence of these chat rooms were deafening, and that in itself has been a pretty good indicator. So, as I've always said, I get interested around 17K. We finally got down to that level, and now we finally see what we've been looking for a long time, which is this indicator right here. Now, let me pull something up really quickly. I need to go back and revisit this, but let me look on my channel for... Right. So I did this video. I'm going to post this in all the chats. I want people to go back and watch this. If you have not seen this, this is a little bit dated because I haven't updated it in a while, but this was, let me see, what was the date on this video? Basically what I did was I looked for the best Ichimoku indicators, the best numbers. This was January the 19th, 2022. So a year ago. A year ago, I made this video where let me just pull it up real quick here. Where I was challenged by someone who talked about using these new, better cryptocurrency Ichimoku lines. In other words, they were using 30, 60, 120. And so what I did was I went back through a back test and using the classic settings of 9, 26, and 52 versus the new settings for cryptocurrency, because they were better, because crypto's open 24 hours a day. That's at least the premise. And I compared that to not only the classic settings, the legacy settings, but I also compared it to the cryptocurrency settings, if it will come up here, and basically took trades, and then I also compared it to just buying back in 2012 and hodling this whole time. And what I came up with was a performance relative to each other. Now, it kind of bandies around a little bit, but by last year, and I need to update this because it's been a year ago, using this strategy, waiting for this signal to happen with Ichimoku, using the classic legacy settings, greatly outperformed both the crypto settings and buy and hold. And so we have since had two things happen in Bitcoin over the last year, since that January. And let's just go through it real quick. So here we are at the all-time high. We are now back in November 2021 when I was yelling and screaming to people that Bitcoin was failing to break higher. Essentially, what you don't want to see in a big bullish trend is a situation like this where you get to an all-time high like we did in October, and that bar, if you see, this bar wicks out and fails to push higher. If this thing was bullish, it should have gone. That's a false breakout. Now, it had a little bit of extra momentum. Again, that was the new all-time high. Got a lot of people really excited. And then about 2 weeks later, yeah, sure, we'll take a look at Mara here in a second. Actually, well, I don't know if I can disclose that, but I have a little inside scoop on Mara. And the next week, 2 weeks later, 3 weeks later, it did a second one. Boom, boom, pushing higher. If this thing was really bullish with momentum to go up to 300K like people on Twitter were trying to say it was, it should have had a solid close above that level. That was a danger sign. And then you had the final death knell for this was on the December 3rd jobs report. Now, what do jobs numbers, what does the non-farm payrolls for the United States have to do with Bitcoin? Well, that is because a lot of borrowed money, a lot of debt was issued to buy Bitcoin at very low interest rates, and the Fed was going to raise interest rates, raising that risk-free rate, meaning that not as much borrowed money could be buying Bitcoin anymore. So this moment on December, well, it was the 3rd, because that was Friday, December the 3rd, this when the data came out. But this bar right here on the 4th, that Saturday, was when Bitcoin got out of the daily cloud, and so did momentum. At 51,000 Bitcoin, you should have been out. And this is what I need to go back and update this strategy based on, because I want to see what happens if someone were to have gotten out at that level. Actually, that was probably inside that data, because the indicator would have said close at that point. So I need to go back and revisit that. That's something I'm going to do before the end of the month. I think that video was on the 19th. So yeah, I can do a 1-year anniversary video, and we'll do it next week. We'll do it next week. And so as this proceeded along, we'll speed it up a little bit. That was where the bear trend really started off the all-time high. And a lot of people, a lot of good friends of mine were dip buying and telling me, oh, I don't want to study charts. I don't want to, miss opportunities. I'm just going to dollar cost average in. And my message to them is you don't have to. You don't have to abdicate a little bit of simple, what I consider to be simple, the fact that if we're coming off an all-time high and we're entering a bear trend, then you need to assume that this down move is going to be bigger than a lot of people expect. And we already have a long history, well, a decade of history, and 4 separate examples of a minus 75% at least retrace off the all-time high. So around the 40s, where a lot of people thought, okay, this is it, this is when I can buy, this is when I can DCA in, you needed to go ahead and assume, you know what, if I wait to what makes a lot of sense, when I wait until there's blood in the streets, as it were, 17K, 20K, I can have twice as much Bitcoin if I'm just patient. But some people don't want to take that extra step, and well, they end up overpaying for it. And so as this price kind of stabilizes, you got back in March a signal to the upside. So let's acknowledge this. Let's acknowledge that we got a false signal. We got a bullish breakout that happened in March 27th, because momentum got out at that same point. So the signal fired, because nothing's ever 100%, but you would have known to get out on the inverse signal once it got back below the cloud again. And so what you would have given up here is a return. Where's my info line? There we go. You would have given up, let's say you got in on this bar right here and you got out here, you would have given up a 14%. In other words, you would have had to have sacrificed about 14% to be smart. Now, a lot of people don't want to do this. A lot of people just want to buy and hold. They don't want to worry about it, because if they get out and it goes without them, then they're going to miss out, or they're going to feel whipsawed. But this time it worked. You could have only given up 14% instead of giving up what came next from 38 all the way down to, well, you saw it. What was it, 15,487 and some change? So on the FTX collapse, instead of taking that 14% hit, following the signal, to be wise about making the decision, you would have been down instead 65%. You could have bought twice as much Bitcoin if you had gotten out at 38, down when it came to around 16, or as we come into today, if you waited until this indicator fired again, let's say you lost 14% there, you sold out there 49%, you could have still, following this way to keep you disciplined, being patient, you could have bought twice as much Bitcoin if you just waited for this, even if you had gotten out and felt like, oh, I might miss it, oh no, oh no. You can make wiser decisions based on some simple analytics. And this is just incredibly powerful. And it's worked over the last 10, well, Bitcoin's been around since, what, 2009? Yeah, we're going up on 14 years now. We're going to have a Bitcoin birthday party with a local meetup here next week. So it's been around a long time, and I think it's never going to go away. So you might as well learn and follow this now. And again, if something happens really bearish, I don't know what happens in the future. Let's say that this thing comes down, you'll know when to get out. You'll know to give up. Let's see, what, another 15% just to be safe. Give up 15% instead of giving up 50%. And then you can always get back in. Now, this is being a trader. I know a lot of people don't want to pay capital gains and figure out capital losses, things like that. That's for you to decide. But this is how you can make a smart decision. And if you've been waiting to get into Bitcoin, if you've been looking for the past year, if you've been holding off, then now's the time. I'm not going to try to talk you out of it. I've tried to talk friends out of it all through this down cycle. Now I'm not. Now I don't talk them out of it. Because the people that were super bullish, the people that were drinking the Kool-Aid, they are probably not, they're probably still buying if they're really die hard, but let's face it, they've already put in a lot and suffered through months and months of pain. Like they don't believe in it quite as much anymore, despite what they might say. Trust me, that's just human emotion. You can't get away from that. So what is it going to do from here? Well, if this does start a bullish trend, I am not going to shoot for the all-time high. I know that may be heresy, but I don't think we're going to get back to all-time high within the next 2 years. The reason I think that is what happened in 2019. What happened in 2019, which was following the prior big bull run up to about 19,000, you had that 86% down move, right? 83% down move down to the bottom. By the way, I remember specifically trading back right around here, November of 2018, where Bitcoin had consolidated. Everyone thought that it had a bottom, and it actually had, guess what, another 50% to go. This is why I'm so cautious and caution people against drinking the Kool-Aid, because it's always going to go lower than you think. Even me, it's going to go lower than I think. Really. Just assume that. Assume that it's going to go lower and then judge your risk accordingly. But after this point, we did, in fact, get a bull run. Again, there's Ichimoku. Again, daily cloud going up. You could have seen it. You could have, instead of trying to buy it on a dip here around 64, you could have bought Bitcoin for 4,200 and up it went. But though a lot of people FOMO'd in, though this is a really big move, a really big rise, this is 2019. Something's about to happen. Something nobody expected and shouldn't affect the price of Bitcoin, but it does. And that was, of course, COVID, which tanked all risk assets as we go into 2020. Kind of did a little fall off here. Again, if you had this big bull move, which you could have captured from the 4,400 in April of 2019, there's money to be made there. But when Bitcoin got itself down back below the cloud in later 2019, get out. That's still some good profit to be made from here to about here. That's a good 100% return. Could have doubled the value at that point. And you don't have to sell your Bitcoin. You could probably hedge it with some futures or something like that if you're on a non-US exchange. I think we might talk about that when the moment arises. But right now, bullishness is the order of the day. And had another bull run here in the beginning of 2020. Interesting thing about the signal here, when it triggered in January of 2020, and then it failed out here, is really not that big of a lost move. In other words, it would have kept you only from about 11%. Got you out before you went all the way down to this right here. And remember, this right here, when this was breaking out around 4,400 back in March of 2019, a year later, Bitcoin was right back at that same level on COVID. This is why I don't jump into the hype on Bitcoin ever, because I know based on the volatility alone, at any price that Bitcoin goes to, this was back in the end of 2021 when it was at 60K. People couldn't understand why I wasn't jumping in. I said, well, you know what? If it goes to 300,000 Bitcoin, I know at some point in the future it's going to have a 75% retrace, and a 75% retrace of 300K would have taken it back down to 55. I still can buy it cheaper. No reason to rush. But this is why I want people to be very cautious of a potential bull run in Bitcoin. Do not abandon rules and do not ape in, or if you do ape in, be a trader. I know a lot of people don't want to do that. I'm not a trader, blah, blah, blah. Okay, fine. Just buy it at whatever price and suffer the drawdowns. That's fine. That's fine. 5-10 years from now, it's going to replace the dollar, yada, yada, yada. But you can do better. And that's why I'm sharing this with everyone. You can use skill and some simple analytics to find a better entry point. So that being said, looking at the 2019 trend, which was not to be, as we know, the bull run, which happened after COVID, by the way, buy it at about 9,000 Bitcoin in May of 2020, and you would have been golden. There it briefly tries to get below the cloud, but momentum did not. Signal didn't fire bearish. Again, did not get you out here, and up it goes. So you're not going to miss it if you just wait. You'll see it, and that's what we're seeing now. And so you could have captured that. Now, that being said, where can Bitcoin go before we get some sort of retracement? Well, now that we've broken that resistance level, we have to look at the 50% from the all-time high down to the low to get our next level that Bitcoin can possibly go to and stall out at. Hold on. Why is this not... That's not what I had before. Okay, well, that's correct. That's correct. So from the all-time high down to here, I would say at around 42,500, that is the broad 50% retracement level. And of course, that is also the weekly cloud as well. Just as the daily cloud needs to get out, so too does the weekly. Just as in May of 2022, when the weekly got out of the cloud here, as momentum did, that was the bearish trend here. You also need to get price out here before you can say we're going up to an all-time high. You need to wait for that. So that's why you need to be a trader. So the two levels I would be looking at is this. The longer-term level of resistance is going to be around 42,000, and the more near-term is going to be from the swing high before the move down to the low again, and that's going to be about 31,800. And so in this bullish trade, what you'd probably want to do is set up a risk reward like so. If it gets back into this territory right here, that's probably going to be bearish. But you can pull a nice 3-to-1. Why is that going away? Let's move over here. Okay, a good 3-to-1 or more by setting up a trade like this, a breakout like this. Now, the reason I want to use this is because if we get back down under the cloud, that's going to trigger our bear case, consolidation, whatever you want to say. And again, we don't want to be in still. This could be a false breakout. That's our way to mitigate that. But if it does continue to trend, then the next level that you just want to hold for is 31,800. And if you're really aggressive, you just want to leave it alone, the 42,000. But see what happens there at 31,800. That's what you want to look for. The settings I'm using for this is the classic Ichimoku settings, the ones that were laid out in the 1930s by Gosho Hasada. And that is the 9, let's bring them up right here, 9, 26, 52, 26. It's the same stuff that's been used for almost 100 years. The crypto ones are not better. They're just a fad. It doesn't really matter if you put in 20, 34, 107. If you were consistent in your analytics, then that is what matters. You train your brain to see the patterns. So you can use whatever you want, but this is what I've used for a decade. And this is what I'm going to go on. And it works. It definitely works. So, any questions? I know we got some people in here, and I've been rambling for a little while. If you got questions, just post them in the chat. ED2009, charting question. When I change through my watch list viewing the charts, TradingView keeps changing the time interval. I want to stay at 5 days for every chart. I just upgraded to Pro from Basic. I don't know if that's going to be a Pro or Basic feature. Hi. Why could that be? It could be, are you switching between stocks or are you switching between crypto? Because crypto, like for instance, if I were to bring up SPY, that's going to change my time interval because it closes day by day, but crypto is going to be open 24 hours. So it's going to be a bigger, longer chart. Sorry, I don't have an answer for you there. I wish I did. But maybe you can contact TradingView support. They're actually really, really, really helpful. I love TradingView. Someone wanted me to look at Mara. Okay. Marathon Digital Holdings, which is a Bitcoin mining company. Yes, with Bitcoin going up, so too are they. And I like the Mara play. I actually like the Marathon play because it's sort of like people that want to have exposure to gold. They will buy gold miners. Marathon is a company that's going to, of course, have Bitcoin holdings, but they're also going to be producing Bitcoin. They're actually going to be generating revenue. Unlike MicroStrategy, which just buys Bitcoin on debt, which we can go into that later. But I like this as a play if you want to get Bitcoin exposure as a stock. I like this better than MicroStrategy. Yes, I will look at gold because gold, I'm sure a lot of people want to look at. So let me look real quick at the other cryptocurrencies, and then let's look at gold because it was asked first. All right. So coin, and Jen is trolling me because he knows how much I dislike Coinbase. It is also going up. But as I always say, Coinbase closed at $49.98 today. I think that this company is overvalued by $49.98. So what do you think about XYO? What is XYO? Is this a cryptocurrency? Okay, yeah, it is a cryptocurrency. All right. Looks like a pump. Looks like a pumper. I mean, somebody's pumping this, and what you got going on right now is you have a pump. You're finding out about it after it's moved up, how much? Basically 242%. You better get a new high. You do not want to see this lower high be the high. This is a death knell for a pump. You want this thing to come up and have a closing bar above this right here. Otherwise, what you're running into is let's just take off Ichimoku here. You're running into a resistance from the run up. This is how I evaluate pumps. It was very useful back in the short squeeze days. Glad you asked because this is good knowledge to share. So you have your big run up, and you already kind of see this failure here to get it back up to all-time high. That's actually on the 4-hour right here. Let's go down to the 2-hour so we can see a little bit better. So let's walk through this real quick. And then we'll look at gold, I promise. So, and of course, if we go into a bullish cycle in cryptocurrency, this is going to be the rage. You're going to see all these poo coins coming back into style and lots of low liquidity pumps. Doesn't mean they're necessarily good, but here's how you can be smart about them. So you take the run up from the point it started, the lowest point, up to the high, because most of the time, let's face it, you're going to hear about these things after they've already gone. And you're going to look for that 50% retracement level right here. That's going to be your defining level. Boom. Let's say that you want to buy here, okay? Definitely don't buy here. Wait for it to pull back to the 50% retracement level. I can already actually see a problem right there, but we'll go for it. And then look to see what happens, okay? As this thing holds that 50% retracement level, you need to get back above that high. You just need one pullback or else you're going to be in trouble. And so as that thing starts to top out, watch it, watch it, watch it. In fact, you can even do a 50% to here to see what happens. Let's go down to the 1 hour. So it comes up, you're holding above it. This is good. This is good. This is what you want to see. It breaks above the 50% from the high to the low. And then now you're starting to fall below it. Now you're in trouble. Now you're not making a push for that high. And if you get another close below the 50% right here, close below that last low, you need to cut it. Okay, it holds it once again. You're holding it. You're holding it. And we're going to get back up to that high. We're going to get back up to that high. Still holding that 50%. See how powerful that is? That's why it has to hold. It has to hold that level. Inching below it. And if you want, you got your stop. You're out. Get out. Dream's over. Dream is dead. Dream is dead.